have done 4 startups, out of which 2 didn't work, 2 work basically. The biggest challenge that a lot of entrepreneurs face is, hey, how do I price this product? Pre-stage entrepreneurs get stuck. Most startups don't work that way.
Ganesh, the celebrity amongst us, I don't know what to ask you, but what stages have you gone through?
From my perspective, so I've been an entrepreneur for 10 years and I have been a corporate employee for 10 years as well. So I've seen both sides of the story. I've been used to salary checks, and then for 10 years I have done my own thing as well, and have done 4 startups, out of which 2 didn't work, 2 work basically. Primarily have been through a lot of the early stage product market fit level iterations a lot, and a lot of the pivots. So while Girish talked about everything from ideation all the way to growth, I would specifically want to talk about the early stage iterations and how that happens, right? How we did it well, and Flathead, it didn't go so well as well. So once you have a hypothesis, like you have a problem you've identified and you've created a solution for that problem and you're going into the market, the biggest challenge that a lot of entrepreneurs face is, hey, how do I price this product, right? Is my audience going to accept this or not, right? What is the entry level pricing, and then how will you graduate to your steady state pricing that you will need to go to, right? What is the right way to hit the target audience? What is the right communication to hit the target audience? You might pivot a lot with just purely the communication as well, right? What is the business model that you will go with, right? For example, when we did our mobile payments app, we realized that digital marketing was not a great way to do it, because Momo, the mobile payments app, was being used in restaurants for real world payments, right? So even though we were a digital app, most of our marketing was in the restaurant. So it was more activations on the ground with waiters recommending the app and stuff like that, right? So it was a lot more offline marketing for an online product, right? So you really need to figure out what is the right way to reach and communicate the message to the audience in a way that converts them to loyal customers, right? So a lot of those iterations are where early stage entrepreneurs get stuck, right? And that's where we talk about pivots, right? I'm sure you've gone through multiple of them through your journey. At some point in time, you realize that you don't have to put in the level of effort that you've been putting in order to start getting the business, right? That is when you can feel the product market fit. Automatically, the business starts moving, like that flywheel starts running. That is when you can start getting into the growth stage and start, raising capital and pushing the pedal on it. But until then, while you're in the product market fit stage, the early stage of iterating through multiple processes and multiple business models, even that is a stage where you would want to put in maximum effort of connecting with your customer very, very closely at a founder level, right? So we would deliver shoes direct to customers. We would go to restaurants and we will talk to customers directly to get them to download the app. That is when you hear the right feedback firsthand, and then you can very quickly iterate on what your solution is. After you get on to the product market fit is when you can start doing a lot of the funding and the growth stage conversations and stuff like that. But until then, that early critical stage is where a lot of entrepreneurs falter and a lot of self-doubt comes in as well. But that is the perseverance that you need to go through. Everybody has to go through that.
One of the first things that I keep meeting a lot of startup founders now and then, one of the biggest or initial proof of concept is that seed stage funding, right? That's very, very important. Once you get that seed stage, then I think you feel some confidence in yourself and you start doing. So if you can help us understand what has been your seed stage, how did you raise that first seed stage?
Since I've done multiple startups, I'll talk about 2 scenarios. In Momo, it was a very small margin business, and we knew that for customer acquisition, you will have to bleed a lot. So fundraise was necessary for you to get into the market and start pushing through. In restaurants, within the first 10 restaurants that we signed up, we already got product market fit. It was very quick and people started signing up with us automatically. When that happened, our initial thought was our seed funding will be from typically friends and family, or there were some early angel networks like Mumbai Angels and India Angel networks at that time. now there are a plethora of them, right? So typically that's where you raise. Friends and family rounds are typically angel rounds, and then once your proof of concept MVP is out is when you can start raising your seed. What we realized at that time was, because the product market fit was so strong, we actually ended up going and talking to venture capitalists, and we raised VC funding very, very quickly. When we had 20 restaurants on board, we already had funding on the table, right? So that is one way to go, but you got lucky there, right? Most startups don't work that way. When we did Flatheads, it was more, initially you have a proof of concept, you have a hypothesis. When you want to launch in the market, you need to build up working capital inventory, right? Because you're making shoes, you're making a physical product. So for that, we raised money for building inventory so that we could launch in the market. And that was primarily from angel funding. There were also, in our area, not as much, but there are enough and more startup, grants, incubators, accelerators, those kind of funding avenues also available, which people can take charge of, especially if you're in a manufacturing field, or if you're in a specific area which the government is focusing on, you can also start getting angel funding, right? So that is the other way. Post that, then the second round we did it with syndicates and a couple of VC conversations were on as well. So that's typically where the funding, seed funding stage works.
Ganesh, I think it's tricky, right? Because an investor is investing in you for the next high valuation. So he will always push you to sell more, get your valuation, because he wants to exit. But you as an entrepreneur, probably if you believe in the company, you don't want to look, you're not looking at an exit. So how do you manage that valuation, profitability, growth? How do you manage all these things?
See, valuation, Vishal said, is an outcome, right? You don't walk in saying, hey, you know what, I'm going to get a $100 million valuation for my company in 1 year. It doesn't work that way, right? You need to go and execute on the ground and prove that you can actually command that valuation. That's when the valuation happens, right? You cannot force a valuation out there just because you want it, right? It doesn't work that way. I honestly believe that valuations are the rat race of the startup world, right? Just like you chase promotions in the corporate world, you chase valuations. And it's a very Bangalore specific phenomenon, by the way. A little bit of Gurgaon as well, but you go to Bombay and you look at startups, they build very sustainable economics from day one. I think Bangalore, since we have been tech focused right in the beginning, and we've seen a lot of this, funding hype cycles grow, we are a lot more focused towards, hey, what's our valuation going to be? To be honest, if you are able to build the product and you are able to command the valuation that you need from investors, then it's great. The question that you asked, the follow-up on what I said earlier in terms of the early stage, your journey, once you hit product market fit, if you are at 1, right? If you don't have capital and you just have to rotate your profits back into the company in order to grow, you will probably get from 1 to 10 in the next, say, 5 years, according to your target. But if you get funding and you already have product market fit, you can actually go from 1 to 100. That journey of growth can get accelerated with funding. If you look at it that way, then it makes sense, right? In order to go and supercharge your growth, what the trajectory is, is between you, your investor, your customer, all your stakeholders to figure out what that trajectory can be, right? That is the journey that you will have to take. But at the end of the day, the investor is putting in money because they need a return on their investment. It's very clear, right? So you will have to keep that in mind the minute you pick up that money from them. You are beholden to your stakeholder in order to give them the returns that they need, right? So be very clear that you are going to get on that journey, you are going to get on that accelerated curve, and they will keep pushing you to get to that level along with your business in order to supercharge that. So that has to be very clear from the get-go.
Yeah, I think interestingly, Ganesh spoke about Bombay guys, and I've seen it in Bombay startup ecosystem. He's right actually, because the cost of living, cost of time is so high in Bombay, because Bombay are Marwadi guys. They know the value of money, they build products which are profitable from day one. And then they look for valuation and growth and all this. So I think that's a very interesting point, Ganesh. I think we are very fortunate to have a young set of entrepreneurs, I would say, who have been there, done that multiple times, and they're here to share the valuable insights. Thanks a lot for joining us, guys.
Panelists to be on the stage. We have a small token of gift for the evening. I'll request Sheshra Paplikar, founder of BHIVE, to come down on the stage and please give the gift.